Hello and welcome back to Explain the Charts. Today is October 8th, 2025, and we are doing an in-depth analysis of the Nasdaq 100 ETF, QQQ. It has been a wild week, with the market pushing to new all-time highs only to see a sharp reversal yesterday. We're going to break down the news driving this price action and then dive into the charts to see what they're telling us. First, let's talk about the headlines. The market started the week incredibly strong, with both the S&P 500 and the Nasdaq hitting new records on Monday, October 6th. A huge catalyst for this was the blockbuster deal announced between AMD and OpenAI to build out AI data centers, which sent semiconductor stocks soaring. This continues the powerful AI narrative that has been a primary driver of the tech sector's performance this year. However, the celebration was short-lived. Yesterday, on October 7th, the market pulled back, and all major indices snapped their winning streaks. Some analysts are now voicing concerns that the market is overbought and due for a correction. Adding to the uncertainty, we have the minutes from the September Federal Reserve meeting being released later today, and a speech from Fed Chair Jerome Powell scheduled for tomorrow. These events will be absolutely critical and could easily dictate the market's next major move. Now, let's see how this all looks on the daily chart for QQQ. Looking at the bigger picture, the long-term trend is undeniably bullish. After a significant pullback in early April where we saw prices fall to near the 400 level, the market has staged an impressive recovery. Since June, we've been in a powerful uptrend, consistently setting higher highs and higher lows. This demonstrates strong underlying demand and investor confidence, largely tied to that AI theme we just discussed. Let's zoom in on the action from the last couple of months. You can see the steady grind upwards through September, building a solid base of support. Now, look at this candle from Monday, October 6th. This is a powerful, bullish green candle that perfectly reflects the market's positive reaction to the AMD and OpenAI news. But then we have yesterday's candle, October 7th. This is what has traders concerned. The price gapped up to a new all-time high of 609.71, but failed to hold those gains, closing way down at 604.51 near the low of the day. This is a classic bearish reversal pattern known as a shooting star, and it often signals exhaustion from buyers and a potential short-term top. This immediately establishes the all-time high of 609.71 as our key resistance level. The low of that candle, around 603, is now our most critical immediate support. To get a better sense of this reversal, let's switch to the 1-hour chart and look at the last few days. Here you can clearly see the strong, steady buying pressure throughout the day on Monday. Then, on Tuesday, we see the gap up at the open, followed by immediate and persistent selling for the rest of the session. The price sliced right back through Monday's gains, which is a sign of weakness. This view reinforces that the 603 level is a critical line in the sand for bulls to defend. A break below that could easily lead to a test of the major psychological support level at 600. So, to recap the key levels and formulate a plan, let's go back to the daily chart. Our primary resistance is the all-time high at 609.71. Our pivot point and immediate support is the low from yesterday at 603.03. Below that, the next major support zone is the psychological 600 level, followed by the prior consolidation area around 590 to 595. Long-term, the August low around 550 remains a significant floor for this bull market. So, what is the outlook? The short-term bearish case seems slightly more probable right now, perhaps a 60% likelihood. This is based on the powerful reversal candle from yesterday and the overbought sentiment. If we see a break below 603 with conviction, especially after the Fed minutes, a move to 600 or even 595 is very likely. The short-term bullish case, which I'd place at a 40% probability, requires the price to hold firmly above 603. If the market digests the Fed news positively and buyers step in to defend that level, it could signal that yesterday's drop was just a one-day profit-taking event. A move back above 607 would put a test of the all-time highs back on the table. Ultimately, The market's reaction to the Fed minutes today and Powell's speech tomorrow will be the deciding factor. Watch for volume to confirm any break of these key levels. That's our analysis for today. Remember, all content on this channel, including this video, is for informational and educational purposes only. It is not financial advice, and you should always conduct your own research and due diligence before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you next time.